Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I'm going to show you how to trade with a triple threat. Now, the phrase triple threat is usually associated with sports. Someone say someone's a triple threat in basketball or in any other sport. But this same phrase can also be attributed to trading the markets, whatever market you decide to trade and whatever time frame. So let's just look at the example here of what the definition is if you're not familiar with the term a triple threat. The standard definition really is an expert in three different skills in the same field. So what we're going to be talking about today, what I'm going to be revealing are three different skills in the same field that can make you a triple threat. These tremendous skills will elevate your trading. For example, let's look at this older chart, and this was in letter A. Now, remember, there are three different features we're going to be talking about today that will really increase your odds for consistency. The first of these threats would have generated a buy signal right here. And as you can see, the market went up immediately after. The second threat also generated a buy signal right here. And so on total, you could have potentially captured 22 points with these first two threats. Now, as the market started to sell off, but stabilize, another one of these signals was generated. But the third threat, which is a filter, filtered out that particular signal to take, and therefore you would not have accumulated any losses on the way down. So this is what we're going to be talking about today, three highly important techniques and ways in which to trade that can increase your odds for consistency. And the beautiful part about this is that once you learn how to apply them, it's extremely simple by using our platform, the PET-D Primo charting platform that teaches you how to trade with the triple threat. So welcome to this educational presentation. Once again, my name is Steven Primo. I'm the president and founder of Specialist Trading. About 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world. Happy to say now that we have students in over 115 countries around the world and in every state in the United States. It's our opinion that education is really what's missing for most traders' trading plan. You see, everyone, in the beginning does the exact same thing. I did too. When I first started trading some 45 years ago, I probably did the exact same things many of you have done already. Following the news, we didn't have the internet back then for, going to these chat rooms or trading rooms, but we had newsletters, waiting with bated breath for all the earnings announcements to come out. And trust me, it couldn't work for me 45 years ago. So I don't understand why many traders think it's miraculously about to start working right now. So what's missing from your trading plan, which is hopefully going to make you a consistent trader, is education. Education about things that have stood the test of time, that have high levels of consistency, and so that you can ultimately make your own trading decisions. That is our philosophy of teaching. That's what we believe in. We don't generate signals so that, on a nightly basis, you come to our website, we tell you what to do, what not to do. That's what most other websites do, and that's why we feel most traders fail. We want you to be in charge to make your own trading decisions. You'll see that attention to detail in today's class. Now, before we begin, once again, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results. In fact, I think I counted before I started today. I have close to 200 slides that I want to share with you. So we have a lot of performance results to share with you. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Since we are first and foremost an educational company, please remember that all examples are strictly for educational purposes only. Now, another way to get free education on a daily basis is to follow us on Twitter. There's our handle right there. I would suggest copying that down because every day I post anywhere from 3 to 5 different tweets. A lot of them are signals our strategies have generated, and I can't go into the rules. That wouldn't be fair to our students who have purchased our courses, but I give you a little background as to why they were generated. Also, bits of financial wisdom to help you in your trading career. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now, remember, if you've come here today thinking I'm going to tell you what I think the market's going to do, have we topped out, or are we going to make another leg up to new highs, or what the best stock is to buy, or what the best stock is I should sell, or should I be trading Bitcoin currency pairs, maybe futures, or stick with cryptos? You've come to the wrong place. That's not what we do. A good educator, as it says here, does not trade for you, but a good educator teaches you how to trade so you can make your own trading decisions. Once again, this is the cornerstone behind everything we teach and trade at Specialist Trading. This is what we call the Specialist Edge. The same edge that I learned 45 years ago and what has sustained my trading that entire time. And hopefully it will be able to sustain your trading as well. Now, a few announcements before we begin this class. Remember, this is going over the Zoom platform, but it isn't an interactive presentation. So therefore, please disable all cameras and microphones, okay? This is just a static PowerPoint presentation. I want you to ask me as many questions as possible, but please wait till the very end of class to ask questions. I promise I'll get to each and every one of them, but at the end, I have far too many slides to share with you today. And if we stop for every slide to ask or answer a question, we'll be here till all the hours of the night. So I don't want to do that. So please wait till the very end. The only question I will answer is the most popular one, and that is this being recorded? Yes, it is. We record all of our presentations, and you will all be sent a link to this recorded video at the end of the presentation. So if you are having technical issues or if you have to leave early, don't worry, you'll get a recording of this later on today. Okay, so please remember, once again, ask questions at the end, and please disable all cameras and microphones. All right, with that stated, let's begin today's class, and let's just jump right into it, okay? What is threat number one? Well, this is a method that I've been using for 45 years ago, for 45 years now. It's the first method I learned 45 years ago on the floor of the stock exchange where I first started trading. This is strategy number 4. I'm sure you've attended my webinars before. You've heard me talk about it because it's such a consistent method to trade. Let me share with you some of the highlights. It's a pattern recognition strategy. So it's based on identifying a pattern that repeats itself over and over again in any market and in any time frame. Now, it's specifically designed for traders looking to identify momentum in advance. So what does that mean? Well, oftentimes we'll see momentum where a stock takes off in one direction, and by the time we identify it, it's too late, right? The momentum is already kicked in, days or weeks ago. The beauty of strategy number 4 is that it will often identify these setups in advance, meaning before the momentum kicks in. Now, it only uses one indicator. That's the 50-period simple moving average, okay? That's it, because it's based on a pattern that, once again, I will teach you how to identify in the course. So let's look at this older example here in MAR. All right, obviously this is a sideways market, right? Someone would say, well, Steve, there's no momentum here at all. Why would I be interested in this? I have to wait for it to break out one way or the other, right? Well, not necessarily, because as you see here, strategy 4 generated a buy signal right within the middle of that kind of sideways market. And then look what happened. So you would have known to get in prior to the momentum actually kicking in. Here's another example, ACAD, Arcadia Pharmaceuticals, okay? Range market, right? Gets up to the top of the range, comes back to the bottom, looks like it's going to go back up to the top of the range, right? Well, not necessarily. If you know how to identify a strategy number 4 setup, you would have seen that there was a sell signal right there within the midst of that range. And ultimately, the stock fell 26 points. Now, obviously, it gapped down on some announcements, some news, some earnings report. How did we know that days in advance? Because this pattern has an uncanny ability of identifying momentum before it kicks in. Here's another example, an MORF, okay? Looks like a directionless market, right? You don't want to get involved in these markets because you never know how long they're going to go directionless, right? They may be going sideways for weeks, months, even years. Well, if you know how to identify a strategy 4 setup, you would have seen that right here, there was a buy signal generated. And in one day, the stock shot up 57 points, okay? Before the momentum kicked in. All right, that's threat number 1. Remember, threat number 1 is based on identifying momentum before it even takes place, before it even happens. But what happens when a stock or something, some market, future currency pair takes off? And we want to get in, but we feel, well, I don't know, maybe I'll be buying at the top. Maybe I'll be selling at the bottom. Well, this leads us to threat number 2, which is strategy number 5, okay? This is a really consistent method based on candlesticks, but it's a non-traditional candlestick method. And you can apply it to all candlestick patterns. It's mainly for continuation traders. So what do we mean by that? Well, remember, continuation means that the trend is already in place. It's already taken off to the upside or broken down to the downside. But the beauty of strategy number 5 is that it will generate signals within the trend. So even if you feel you've missed the move, if a signal is generated, most likely there's still a little bit more room left in that move. And once again, only uses one indicator, the 50-period simple moving average. But it's a non-traditional way of trading candlestick patterns. All right, let's look at this example here in JBHT, JB Hunt. It's in an uptrend, right? Most traders will say, well, yeah, it's really taken off. I don't want to buy it here. It's up a little bit too high. But strategy number 5 generated a buy signal, and the stock went up another 15 points. And if you miss that, there's strategy signals generated along the way. Now let's look at another example, CHKP, Checkpoint Software. Obviously in a downtrend, right? The stock was trading roughly around 140, dropped down all the way to 120. But at this point, you can't tell yourself you want to sell. And on top of that, that chat room you go to says there's major support. This is where the institutions are buying. Made a double bottom here. So you want to buy it, right? Well, let's see what strategy number 5 says. Actually, it generated 2 sell signals right where you thought there was support. Had you taken either one of those sell signals, you could have potentially captured an extra 9 points to the downside. And here's another older example in VIAC, Viacom, okay? This is when it was going straight up, all right? One of the traders could have said, there's no way I could have bought this, but look at here, we had a buy signal generated, and then the stock quickly rose 50 points. And remember, I just showed you some really good examples here. But remember, once again, losses are inevitable. That's probably one of the main concerns I get from students who prospectively want to join our group or our membership or our first-time students. They say, well, Steve, I don't want to lose anything. I don't want to, get, into any type of a drawdown. Well, remember, losses are inevitable. I was trading today. I had 2 wins and 1 loss. So you're going to have losses all the time. But let me share with you a couple of them. Here's an older example in Tesla. This is a strategy buy signal, one of the threats. And look what happened. Didn't work out, right? And here is a sell signal. Strategy number 4, one of the threats. Didn't work out. So once again, you will see losses from time to time in both of these strategies, both of these threats. I don't want you to think that they never fail. They're always working. But since they're inevitable, there is still a way to filter many of them out. Because there is a way to actually say, well, listen, I don't want to go into a large string of these losses. I can filter out some of these really bad setups. But how do we do that? Well, this brings us to threat number 3. Excuse me. This is the PET-D, another tool I was introduced to some 4 decades ago on the floor of the Pacific Stock Exchange, where I first started. So what exactly is the PET-D, if you're not familiar with it? Well, it's a proprietary algorithm. We've taken all the hard work out of it for you because when I first learned this, it was something I had to calculate by hand on a hand calculator, and it was extremely cumbersome. But we've taken all the hard work out of it for you, so it's proprietary, and we've developed it into a color bar tool. What it does is it colors the bars either green or red, and it tells you the short-term trend by the specific color. For example, as we look at this older chart in Edna, we see here that, okay, it's going up. Most of the time, we don't find out or we're not convinced it's going up till somewhere around here. And right when we get in, look what happens, right? Happened to anybody before? But if you apply the PET-D color bar tool, as you see here, we had consecutive bars that were colored green. And that was telling you well in advance that it wanted to go up. And now, even though the PET-D is not a predictive tool, doesn't tell you what the top is or tell you what the bottom is, it really is sensitive and can get you out and identify a trend change by consecutive red bars. So you would have known well in advance to exit or to go short, stop and reverse before the bottom fell out. So this is just one of the, I would say, dozens, if not hundreds of ways to apply the PET-D. But in our opinion, probably the best and simplest way to apply the PET-D to elevate your trading is to apply it as a signal confirmation tool. So how would we do that with strategy number 4 and strategy number 5 signals? Here is the formula. For buy signals, Only trade strategy 4 and buy signals that are colored green. In other words, the bar needs to be colored green. There's going to be a little green arrow that generates or identifies the signal, and that bar must be colored green by the PET-D. Now that can be an up day or a down day. Makes no difference. It needs to be colored green though. Now, what if we get a sell signal? Well, it's the opposite. If you get a sell signal in strategy 4 or 5, you'll see a red arrow above the bar. Only trade strategy 4 and 5 signal bars that are colored red. Okay, it could be an up day. It still needs to be colored red. Okay, let me share with you what I mean here. Let's look at those older examples. This one in Tesla. Remember we had a buy signal and it went straight down? Well, if we had applied the PET-D on our platform, it's as simple as just clicking on the PET-D on our upper green strategy tab. And once the colors change, you see the bar above the arrow should be colored green in order for us to take this. But what color is it? Now, even though it's an up day, it's outlined red. Therefore, we do not take the trade. And look at how it filtered out that bad loss in Tesla. Conversely, remember this in BBY? We had a strategy number 4 sell signal. Okay, terrible signal, didn't work out at all. The minute we sold, it went straight up. But if we had applied the third portion in the triple threat, which is the filter, the PET-D filter, we would have seen that once the colors changed, a sell signal needs to be colored red. Now this bar is filled in green. Even though it's a down day, doesn't matter. It's filled in green. That's the PET-D telling us, translating that the market doesn't want to go lower. It wants to continue to go higher. That's how sensitive the PET-D is. So we should not have taken this trade and therefore would not have lost any money. So there you have the 3 components of consistent trading. And when we combine all 3 of these methods, all 3 of these components, we get what we call specialist trading's triple threat of trading. So now that you understand the process, now that you see how simple it is with 3 of these highly consistent methods and techniques, excuse me, let's look at some recent examples, okay? Most of these happened within the last month. Some of them happened within the last few days. And remember, everything you're going to be seeing is displayed from our platform. We show you how simple it is to trade with a triple threat and to learn how to trade with a triple threat by applying our platform. It really is like a mentoring tool because everything is one click away. It's right there and you have access to everything right in front of you. Okay, let's look at this chart in SNPS, Synopsis Inc. Once again, someone looking at this would say, wow, it goes up, it goes down. This is what we call a choppy market, right? Goes up, back down, back up, back down, and so forth. How can anyone trade something like this? You know, you're not a day trader, let's say. You'd like to hold on for a little longer than just half a day. But even though it appears to be a choppy market, if you click on strategy 4, in the drop-down menu, click on signal arrows, you would have seen that a buy signal was generated right here. This was the 21st of January. And look what happened in 3 days. Before that, we want to verify with the PET-D, and we see that the PET-D was outlined green. So now you have a high probability triple threat signal. And now look what happened in 3 days. Stock went up 17 points. I know you may say, well, yeah, Steve, this is an expensive stock. That's 5% price value though. The price of the stock rose 5% in just about 3 days. So that's great, a little number there for just a short, quick trade. How about this in Oracle, okay? Once again, this is what we call a range market. We trade at the top of the range, go back to the bottom, go back up to the top. Once we come back to the bottom, now a lot of traders usually say, well, Steve, these are great. I love range markets because I'll buy at the bottom, I'll sell at the top, I'll buy at the bottom. And you'll do that until it doesn't work, right? And then you give usually everything back. Much easier to listen to the market by applying firstly strategy number 4. Click on signal arrows in the drop-down menu, and you see that a sell signal is right here. Now, before you think you should cover and buy, let's first see what the market is telling us. Is it confirming this? Apply the PET-D. Yes, it is. See, the bar is down, but it's colored red. Remember, this is not a conventional way of looking at up and down bars, because here we have 3 up bars in a row, and what color were they? They were all outlined red. So all we're concerned with is the color of the bar. Doesn't matter if it's up or down, and It's a nice quick 10 points. So see, if you had sold here, bought here, sold here, and then decided to buy here and go long, most likely you've given back everything you made in the last 3 trades, right? Much simpler to apply the triple threat. Let's look at this example in COP, ConocoPhillips. Well, it looks like we're kind of trending higher. In fact, we're in an uptrend, but we're closing towards the high here, and the stock's kind of shot up. We've done our analysis. Maybe we go to that chat room, and the guy in charge of the chat room says, you know, this is overbought. I think you should buy the puts. This would be a great little quick trade. As it goes lower, then you'll cover, then you can go long. So you're overthinking the process. Remember, this is in an uptrend. So what should we look for? A continuation of that trend. Therefore, we apply strategy number 5, okay? Right here on our upper green strategy tab in the drop-down menu, click on signal arrow, and there's a buy signal. And you can say, well, how can I buy that at the very top? You know, I wish I would have bought it lower. Well, it's too bad you missed it, but guess what? Strategy 5 says it's still got some more room to the upside. Now, if you want to get a little bit more confidence, confirm it with the filter, the PET-D, click on PET-D. And yes, even though the other bars are colored green, all we're concerned with is this one. It's outlined green. So that's a high probability setup. 16 points coming in to mid-end of January. Here's an example in ADSK, okay, Autodesk. As we see, once again, sure, it's been coming down, but look at this right here. This is major, major support, right? That chat room you go to says you got to buy here, pick up some quick, cheap calls because they close towards the low. This is going to be a great trade. You're going to make quick money to the upside, right? What is the market telling us? First of all, we've been going lower, so is it going to continue in that direction? Click on strategy 5, the continuation setup, click on signal arrow, and yes, it's saying it wants to go lower. Now, how do we confirm it? Apply the PET-D, and not only are all the bars red, but this one we're concerned with is red. So that's all we need to know. Where everyone is buying on that major so-called support, where all the institutions are buying, you're going against it and saying, listen, I'm not going to listen to those outdated things that really don't work. I'm going to listen to the one thing, the source in front of me, the chart that's telling me it wants to go lower. And 25 points coming in to about 2 weeks ago. Now, remember that chart we started out the presentation with? How did we take these signals right here, but then not take this one? Well, it's as simple as applying the PET-D. That's how powerful the third threat is, because it will keep you out of danger and keep you in some really consistent setups. For example, these 2 trades were very profitable, and this one should not have been taken because it was colored red, and you would have avoided any deep loss. As you look at ATVI, okay, Activision. Once again, we're kind of going sideways, right? This was coming into the middle of January, but right here, a buy signal was generated. Even though the other bars are red, it makes no difference. All we're concerned about is this bar. Remember, you can have an up bar that's outlined red or colored red, but since it's colored green, that's a high probability triple threat setup. You could have bought right there and made 20 points in 4 days, okay? Now, the reason why this gapped up, I was told, is because there were buyout rumors. The stock is getting bought out. Now, isn't it funny that the pattern that strategy number 4 is based off of generated a buy signal before that news even came out? Remember, nothing that we teach nor trade is based on fundamental news. It's only based on market behavior, not off some rumor where someone may buy a company or some earnings may come out or some economic report may boost the economy. We don't take any of that in consideration. In fact, I stopped looking at fundamental news 45 years ago. And if I'm still, actively trading and I still haven't lost everything, I'm living proof that you really don't need that to be a consistent trader. So if you want to, we'll never tell anyone to stop looking at news, but if you want to, you can, but it's not in any way required, in our opinion, to be a consistent trader at specialist trading. And this signal here in Activision is a perfect example. All right, let's look at this downtrend here in Zoom. Okay, this was coming into January, mid-January actually, just about a month ago. Obviously, it's coming down, but at this point, most traders are taught, well, listen, Steve, that's a good place to pick up some cheap stock, right? I mean, it's so oversold. All the indicators are saying it's oversold. That guy on TV says you got to pick it up. And, I can't sell it down here. It's at the very low of a sell-off. Well, strategy 5 generated a sell signal right at the very low of that continuation downtrend. It's colored red, so this is a high probability sell signal. Whoops, 35 points coming into the end of January, just a few weeks ago. Here's an example in Dollar Tree, okay? 2 buy signals are generated here, strategy number 5. It's slowly creeping up, not a strong trend up, but it's trending up 50 points coming into the end of November. This is going back a little bit further. Now, as we see here in the video, we see that we're going sideways here, right? Kind of a rangy market, down, back up, back down. But a strategy 4 sell signal was generated here, and it was colored red by the PET-D. Had you taken that signal on the 13th of January, coming into a couple of weeks ago, you could have potentially captured 55 points. Here's a buy signal in AMD, okay, Advanced Micro. All right, the trend was going straight up, right? So while we are trending to the upside, we see here that if we apply the PET-D, all of the bars are green. So since we're continuing in an upward move, we want to apply strategy number 5, and these are all strategy 5 buy signals. Potentially, you could have captured upwards of 48 points, okay? Now, as the market kind of changed, it kind of ran out of steam. Look what happened, okay? The trend changed, and all of a sudden, all of the bars, the majority bars, turned red. Well, strategy number 4 generated another signal here where you could have potentially captured 30 points. Now, altogether, once again, potentially you could have captured 78 points, all right? But that's if you had taken the first signal and gotten out at the very top and so forth. So a lot of students say, well, Steve, yeah, I can't do that. There's no way I can get in at the bottom and get out at the top and vice versa. You're right, it's very difficult. So let's say you only captured half of that, okay? You only captured, instead of 78 points, you captured 39 or 40 points. Would you be happy with 40 points? Okay, that's still not bad for 2 or 3 months work, right? Let's say you only captured a third of that. Would you be happy with 25 points? You see, so you don't have to capture everything. If you take a nice piece or a nice chunk, a little golden nugget out of these moves, you can still have some really consistent trades. 25 points in 2 or 3 months, that's not a bad little trade there. All right, here's a perfect example of a sideways market in Netflix, okay? This was coming into January. Most traders would say, it's getting ready to break out to the upside or the downside, but I won't do anything until it breaks out one way or the other. And I think it's going to go up, so I'm going to wait for it to break out and then I'll buy. I don't think I'll short this because it's, it's Netflix for God's sake. It's a great stock, so why would I want to sell it? Do you see how all my justification of what to do is based on an outside source, either the company's earnings or a breakout that has no statistical advantage to that? What is the source telling us? What's the market telling us what it wants to do? Well, let's look at strategy 4, which is based off a pattern that the market generates over and over again. And guess what? It's generated 3 sell signals where you think it's going to break out and where you think it's going to be a good breakout to the upside and the company's really strong. We say, listen, we don't care about any of that. We don't even look at that stuff. The market, the thing we're trading, is telling us it wants to go lower. Now, in order to confirm it, let's add our confirmation tool, the PET-D. Okay, click on PET-D. And what do we have here? The first 2 sell signals are colored green, even though they're both down on the day. You see, we have a series of 1, 2, 3, 4, 5 bars that close lower. But what color were they? They're all green. So this is our translator, the PET-D, telling us that, well, we're still in an uptrend, a short-term uptrend, so why would I want to sell? So I wouldn't take those trades, so they're not confirmed. But guess what? The very next bar, the pattern generated another signal, and this one was confirmed. So even though we could have taken these ones, we can take the next one. 250 points to the downside, okay? Once again, some news or something came out here that caused the stock to gap down in mid-January, mid to end of January. I have no information about that. It wasn't like the CEO of Netflix called me up 2 weeks earlier and said, hey, Steve, you may want to tell your students to short our stock because some bad news is going to come out. I stopped looking at that 45 years ago. So remember, everything you're seeing is based off market behavior. Now, let's say you're a continuation trader. You didn't take that signal. So the continuation now is in full force to the downside. Well, what do we have here? Strategy number 5, sell signal, okay? So see, you're getting the best of both worlds. You can get a strategy that is generated when it looks as if there's no momentum at all when it's going sideways. Or you can get a strategy on top of that where the momentum has kicked in and it's really moving in one direction, either up or down, and you can still get on board. And on top of that, the third threat factor is that you can confirm these setups. All right, so let's recap the triple threat of trading. First threat is strategy number 4. This is a pattern recognition strategy, something I learned over 4 decades ago on the floor, and I continue to use to this day. Strategy number 5, threat number 2, is a non-traditional way of trading candlesticks. Totally different, extremely simple, but a continuation setup so that you can jump in when a already established trend has taken place. Threat number 3 is the PET-D. We call it our translator because it literally translates what any market wants to do at that moment on a tick-by-tick basis. That's how sensitive it is. It's the most, really, in my opinion, it's the best tool I know of for finding the short-term trend, and it has a host, dozens of different uses for it. You can apply it as a stop trend filter. You can apply it for different ways to confirm signals, different ways for different techniques. It's a great, great tool to have in your trading plan. And when you combine all these together, you get Specialist Trading's triple threat of trading. Now, I want you to ask yourself a question before you ask me questions. Do you think these 3 methods could have helped your trading in this past year? If you answered yes, and I think the majority of you would say right now yes, well, we have a great special offer for all of you attending today. We're going to offer you our triple threat special. This is strategy 4, strategy 5, along with the PET-D. You're going to get instant course access, detailed instruction. If you notice, I didn't talk at all about exactly where you'd enter, where you'd exit, where to place the stops. We go into detail with all the different variables for those aspects in the course. Now, along with this, you're also going to get 4 separate PET-D trading techniques. These are techniques based solely off of applying the PET-D. And they are great. I use them in my own trading as well when I see certain setups, and you're going to learn 4 of them. And also on top of that, you're also going to learn conservative as well as aggressive versions for the triple threat. This is an amazing, amazing offer, but we're not going to stop there because remember, everything you saw today was coming from displays from the PTS Primo charting platform. So here's what we want to do. As an extra bonus, we're going to throw into the price a full year of the PTS Primo charting platform. Now, this normally costs close to $1,200 for a full year. Guess what? We're not going to charge you that. In fact, we're not going to charge you anything. We're throwing in a full year of our platform absolutely free. We have testimonials. You can go online from students that use our platform, our educational platform, telling us how well it has helped them, how simple it is, and how you can find things that aren't, offered on any other platform. For example, you're not only going to get strategy 4 or 5 in the PET-D, but you'll get our proprietary buy-sell line, 4 different ways for determining the overall trend. You'll also get our strength of trend tool. This is a way to tell you when a trend is running out of steam or not. You also get auto-generated exit levels, just one of our different methods for telling you when to exit a trade, and a host of dozens more trading techniques and tips that you won't find anywhere else other than on the platform, because these are things I've accumulated in my 45 years of trading, and mainly that I've taken from my days on the trading floor, on the stock exchange. So these are things that professional traders use and you won't find on any other platform. One of the best things is our signal scanner. If you've come to my presentations before, you've often heard I have a pet peeve about scanners. I've used just about any platform you can think of. And I just really have a pet peeve about things being overcomplicated when they don't have to be. I can tell you horror stories how it's taken me hours just to scan for one setup. It's just ridiculous. Well, with that in mind, we specifically designed our scanner to be as simple as possible. You can scan a host of different markets. In fact, you can scan other markets other than stocks. Let's say you not only trade stocks, but you like to trade futures. Maybe you like to trade currency pairs, even cryptos. We offer you the data for all of those different markets so that you can scan on a nightly basis. For example, here are some older charts. Here's an older chart in the Swiss franc, okay? As you can see, the trend was up. It was continuing going up. So what did we apply? Strategy number 5. And these were all strategy number 5 buy signals. And they were all confirmed by the PET-D. Excuse me. Here's a older chart of the E-mini futures. All right. Once again, the trend is down. So we applied strategy 5 once again. They're all confirmed, and potentially you could have captured 20 points. That's $1,000 per contract, potentially could have captured. You could have scanned for each and every one of these setups. And also, once again, a daily chart of the British pound. Here's a strategy 4 setup where the market was kind of going sideways. Right here at the top of this range, a sell signal was generated and 390 points, potentially $4,000 per unit. Okay. So it makes no difference what market, what time frame. You can still scan, you can still trade the triple threat with all and any of these markets. So let's break this down. Okay. Here's the triple threat. Now, strategy number 4 usually runs for close to $700, and so does strategy number 5. Now, the PET-D, because of its sensitivity and it's more valuable, you can apply it to anything and everything, is a little bit more expensive, runs close to $5,000. Now, when you add these all up together, we're talking about close to $6,400, and that's not including a full year of the platform. Remember, if we add the platform in that, we're talking over $7,500. Now, don't worry, we're not charging you $7,500. We're not even coming close to that. So our discount for this is that we're not even going to charge you at all for strategy number 4 or strategy number 5. We're only going to charge you for the PET-D. We're not going to charge you once again for the platform. All of that has been erased. So the final cost is $49.95. You're going to save $25.54, roughly 30%. Now, here's the best thing about this offer. You're getting all these things included for one cost. But if that cost is still too much for you to come up with in one lump sum, Pro Trader Strategies has been nice enough to offer payment plans. So for a small deposit, a much smaller deposit than $49.95, you can still be up and running and have established a payment plan, a monthly payment plan, and still be up and running as early as today. So you don't have to come up with $49.95 if you don't want it. And obviously, you can pay in full, and you're still saving roughly over 30% on this great triple threat offer. Now, if you're still not convinced, let's look at something that happened just a couple of weeks ago, okay? Here's a strategy number 5, buy signal in FUN. This is Fund Cedar Fair LP. Now, this was on towards the end of January, just a couple of weeks ago. Buy signal was generated here using strategy number 5. The bar is green. And look at the nice 15-point gain after that, okay? Not a bad little trade here. If you're wondering whether you want to be using these things, well, look at what just happened the last couple of weeks. Or let's see here what happened just 3 or 4 days ago. This was a sell signal generated by strategy number 4 in Moderna. Okay, all the bars are red, but all we care about is this one. This is red. This doji is red here. Even though we're kind of in a range going back and forth, this pattern is saying you better sell because it's confirmed by the PET-D and it doesn't look good. Look what happened. 22 points in one day. You think you could have done well, maybe buying some puts or some type of spread with a downward bias. So this just happened 3 or 4 days ago. So one last thing. Those were triple threat 1 and 2. What about triple threat number 3? Here's a strategy number 4, buy signal. If you had just simply taken this, look what would have happened. You would have lost a lot of money and you would have said to yourself, this stuff doesn't work. But with the third component in the triple threat, you could have applied that and seen that once you clicked on the PET-D, the bars were red and you would never have taken that trade and never have lost anything. So you see how valuable this is. If you're not convinced by seeing these things that happened within the last couple of weeks, I mean, you never will be. And this is how it can really help you with your trading. And guess what? If you had not taken that trade, you would have been free to take the strategy 5 setup that happened just a few days later and potentially captured an extra 12 points coming into the end of January last month. Are you going to wait another year to become a consistent trader? Think of it. How long have you been waiting to finally turn your trading around? Take charge of your trading. Take charge of your trading destiny. Learn how to trade with the triple threat and become in charge of your trading for the very first time. I'll be there with you every step of the way in the course. Here's how to take advantage of this. Contact Pro Trader Strategies. They're in charge of all of the discounts, of all of the tech support with the platform. Any questions you have, I would suggest calling them at 310-598-6677. They have trading consultants manning the phones. They would be more than happy to establish a payment plan with you, or just tell you a quote so that you can understand what it would cost you and what you have to have. But I think you'll be very happy when you see how flexible they are with their discounting, okay? Now, the link you see at the very bottom is the link that will take you to the info and the sign-up page. A live link has been posted on the chat box. So you don't have to copy and paste that. You can just go to the chat box and click on that little tab there, and there's a live link at the very bottom. Now, I promised you I would reserve the last portion for any questions. So please, if you have a question, just go to the chat box, type it in right now, and I'll be more than happy to answer anything. You said that these are potential gains or losses that you could have taken, but where do we get out? Well, once again, that's a good question. Once again, all that information is taught in the class. Now, as I said in the beginning of the presentation, we are an educational company. So our goal is to teach you how to trade. Now, our philosophy is that no two traders should ever trade alike. That's why we're not a signal service. That's why we don't spit out signals on a nightly basis or tell you what to buy or sell in webinars, because we don't believe in that. We believe that every trader has a different risk parameter when they come into a trade. Some traders like to trade more than others. I know when I first started trading, when I was in my 20s, I wanted to trade 100 times a day. Now I'm happy just trading once a day. That's fine for me. Okay. So everyone's different. So if I gave you the exact same entry, the exact same exit, the exact same stop placement for every trade, well, then you would say, well, I don't like to trade so many trades here. I thought it was going to go higher. Why do I have to exit here? So with that in mind, we give you variables for entries. We give you upwards of 6 or 7 different ways to enter, 6 or 7 different ways to exit, 6 or 7 different ways to place your stop or track the trade. And then you can decide, after studying and researching all of these, along with us helping and guiding you, which one makes you feel the most comfortable. I mean, there are some traders that like to get in and out and say, thank you, I take my quick profit, I move on to the next one, because they like the action. There are other traders that say, listen, I want to get the most bang for my buck, so I'm not going to use that exit level. I'm going to use another exit level that you teach, okay, an exit method. Someone may say, hey, you know what? I'm just going to get in at the market. I don't care. I'll use an aggressive way. Okay. Where others would say, no, I want to get the best possible price, so I'll use a different exit, or I should say entry plan. There's nothing that's worse or better than the other. It's just you have to fit something that really meets your needs. And this is the perfect way. Okay. The scan, it is related only to strategy 4 or 5 and PET-D setup. Well, yes, that's the triple threat to answer that question. But guess what? On our platform, you also have other things that you can scan for. Remember, I told you there are other techniques and methods that you won't find anywhere else, such as the buy-sell line. It tells you the overall trend. How about the top-bottom 25% feature? Another way to determine the short-term trend. There's a lot of different things to apply and use that are for free on our platform that you can scan for. So this is just one scan that you can get on the platform, which is directly related to the triple threat. But remember, we provide you in these scans with data for, let's say, Canadian markets, data for overseas markets, data for the Asian markets, data for European markets, exchanges, ETFs, futures, currency pairs, cryptos, commodities. So it's just a host of different markets that you can choose from whatever one you want. So it's just tremendous information, and you can't believe how simple it is. I mean, it's extremely simple. It's basically click on the strategy or the method, the triple threat method. Click on whatever market you're interested in. Let's say it's just the NASDAQ 100, and then click scan. That's how simple it is. In less than a minute, you'll see all the signals generated for the next day, whatever market you're interested in. So we made it simple like that on purpose. Once again, we didn't, fall into this by accident. We really wanted it to be simple so that you could concentrate on deciding what your setup is going to be, which market you actually wanted to trade. Okay, good questions. Any more as we still have some time here? Someone says, what do you mean by you'll be there with us every step of the way? Well, the course you're going to be getting is a video course, okay? It is a recorded course, but that's great because it's yours to keep. You'll have that, in your longevity whenever you want. You can always reference it and study and learn it. But while I'm there with you all the way is meaning that you'll get my private and personal email address where you can contact me whenever you'd like. I know we have some students in the class today who have sent me emails in the past, and I try to respond within the next 24 hours, maximum. I don't want to keep you waiting where some websites do, where you hear back a week later. Also, you will never be contacting an intern or an assistant. Everything comes straight to me. In fact, I don't have an intern or an assistant, so I will see all your emails and I will answer them personally. So that's what I mean by I'll be there with you every step of the way. You can contact me whenever you like, multiple times a day, on the weekends, before the market opens, after the close, makes no difference. So any questions you have or an explanation for the triple threat, I'll be there to answer it for you, okay? So it's just as good as me sitting next to you via email. Okay, well, there are no further questions. Remember, contact Pro Trader Strategies if you're interested at all. And remember, there's absolutely no obligation. They're not there to pressure you. They're there to work with you. As I said earlier, they are extremely flexible. So if you want to establish a payment plan, they'd be more than happy to give you a quote or set it up over the phone for you so you can be up and running as early as today with the triple threat, okay? But there's absolutely no obligation. Once again, just call 310-598-6677. They'd be more than happy to work with you. Now, as we take one last look at our disclaimer, once again, thank you so much for taking time out of your Wednesday. I hope you learned a little bit about our philosophy and our concepts of trading, but most especially, I really hope you take advantage of this great offer to become a student of mine in the Triple Threat course. Thank you so much. I wish you the best of luck in trading, and I hope to see you next time. Bye-bye.